Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, May 8th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Before we get to the charts, I do want to invite you to join me tomorrow for our free educational webinar. If you go here to pivotboss.com/profits, you'll see we have a flash deal going on right now for Swing Trade Pro 2.0, the 5-step swing trading blueprint. And if you scroll down a bit here, you'll see free webinar. This is the Making Money with Trade Sequences webinar. It's basically a kind of a tip of the iceberg to the Swing Trade Pro 2.0 educational module. May 9th, Tuesday, May 9th at noon Central, 12 o'clock Central Time, 1 o'clock Eastern Time to join me. So you can see here, 1 day, 3 hours, etc. You can click this Join Now webinar link right here. So whenever it begins here, you can click this and it'll begin the webinar for you. For those of you that are already a part of our Swing Trade Pro 2.0 module, you'll have live sessions coming up next week. So next week we'll begin our live sessions. This is free to new and existing Swing Trade Pro 2.0 members. So again, next week we'll begin a week-long live education, prospecting, and trading webinar series. And if you scroll down here again, you can get access to all of this for 29% off right now, $497 versus the $697 cover price. So again, join me at pivotboss.com/profits, and tomorrow we'll do this live free educational webinar here. And now let's get to the charts here. If we take a look at the daily time frame of the ES right now, we got a very narrow range heading into the RTH Open, just 30% of average range, 18.5 points. Same thing for the NQ. That's trading at 22% of average range, just 47.25 points. Very narrow as we head into the week. And this could continue to be mostly the case today as we head into inflation data on Wednesday morning. Wednesday morning here we have inflation data 1 hour prior to the RTH Open. So we could build out early in the week here. One of the things to keep an eye on is the previous week's high price. That's going to be way back here, and we're the previous week's lows here. So we're kind of near that midpoint of the week. So we could look to see an early move to go find an edge, but we've been continuing to trade right at the center of this expanding range here. You can see right there the range been trading back and forth. So we're right there at that zone. 4150 is the FOMC key level, and we could see continued range-bound action off of that zone here heading into the RTH Open and beyond. Again, inflation data on Wednesday is going to be the big day that could provide volatility the rest of the week. Let's take a look here at the NQ. This one continues to trade in a multi-week range as well. Incredibly compressed range here. This range has built out since the final week of March, all of April, and now the beginning of May. Big time compression here at these highs. And again, this market has been one that has been fading back and forth without any real directional conviction. We've seen this market actually rally and then just dump right back down. So again, keeping an eye on the previous week's high is going to be important. That's this high right here. How does price respond to that? After these moves up, we see the price just whittle back down. A move up, whittle back down. This move up, come back down. So we saw this squeeze on Friday. We may see this thing come back down here the rest of the week as this remains mostly within range. Until we see expansion, we're likely going to see this thing continue to trade within this range here until proven otherwise. Once we do get expansion, we could get a move that's about 1,000 to 1,200 points in range. All right, let's take a look here at crude oil. Now, crude's up 2.9% right now, a big time squeeze. This is one that we did have some great directional conviction on. As a matter of fact, last week here on a Wednesday, we did the monthly outlook. That monthly outlook, we saw the rejection of crude oil come into play after hours. That rejection led to a great bounce the next day. It held those gains, and now we've seen 2 straight sessions of strength. Now, one thing we mentioned here is that if we do find that rejection here off the 64s, first test target was going to be 72, high probability target 76, and then you look for that far off magnet at 80.5. That's going to be the next target up above. So right now, any pullback could be an opportunity to buy this thing this week ahead of a continuation up towards 76 and beyond. Taking a look here at gold futures now. Gold futures up about 1/4%. This one had a pretty significant rejection here at these highs. This was a massive area of confluence. Previous year's highs, significant 4-year CLVN, a rejection at the R3 band on the yearly PivotBoss pivots, monthly highs, all of those things, and we've seen this thing dump back down. So a higher high failure at the moment. Does that higher high failure lead to a big time reversal, or do we just go test the opposite edge? 1980 could be a big test here up ahead this week. And if we get into 1980 to 1960, it wouldn't be surprising if we go expanding range back up. So really the failure point here is failing to hold 1960. If you fail to hold 1960, that could open up a return back toward 1830 up ahead. Lastly, taking a look here at the YM. You'll see the YM trading very similar to the ES and to the NQ. Only 151 points of range. It's been averaging 530 on a 5-day basis. We're right back at the center here. You can see the FOMC key level 33.811 is the FOMC from last Wednesday, and we continue to trade at the center of this expanding range. So further range bound action until proven otherwise. Inflation data day on Wednesday could provide a nice boost to these markets. All right, that's it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.